Hey there, Dave Keller with Market Misbehavior. Last week I did a video called What's Next for the QQQ. We talked about 4 potential future paths in the NASDAQ 100 ETF. What may be more likely than others? Really laid it out more as an open question. Got some really good comments, really good commentary, really good feedback on those 4 different scenarios. Today in this video I wanted to follow up on that one with my own probabilities and how likely I see each of those 4 scenarios actually playing out. So these series of videos, what we call a choose your own adventure style video, I think is a great illustration of the concept of probabilistic analysis. What I find with a lot of individual investors, a lot of retail investors, we tend to have a point of view, we tend to have a position or a narrative or a thesis, and we just kind of stick with it, right? And we just kind of focus on here's what's going to happen, and we make that position and we argue on social media about why it's obviously going to happen and why it's so obvious that Bitcoin's going to go to the moon or why Bitcoin's going to go to zero or somewhere in the middle. In reality, what I found with my experience working with institutional investors, it was much more of a focus on probabilities. Here are the different scenarios we could see. Here's the most likely scenario. Here's a less likely scenario. But the point was you thought about all the different potential future paths. I think that's really important for investors to get comfortable with because the financial markets are filled with 3, 4, 5 standard deviation moves, what Nassim Taleb calls the black swan events, right? Those unlikely, but they happen, right? Those events that just kind of happen, and way more often in the financial markets than in a normal distribution, sort of that bell curve. The financial markets have a much thicker sort of tails, what we call the fat tail effect. So things that are much less common happen much more often in the financial markets than you might expect if you're a statistician just looking at a normal distribution. So in a recent video, put a link in the description. So if you've not watched that video first, stop, hit pause, go watch that video, and then come back because this one will make a lot more sense. Here we're actually going to talk again briefly about those 4 different scenarios. Then I'll share with you my own probabilities, how I got to those decisions. So here's my chart of the NASDAQ 100, the QQQ, and we had 4 scenarios. The super bullish scenario basically was a move to all-time highs. This is looking out about 6 to 8 weeks. I'm not super rigid on that time frame. That's just sort of the general time frame I'm liking to look out for this sort of exercise. So the super bullish scenario number 1 in green is basically the pace of this trend that we've had year to date continues, right? We just continue to make higher highs and higher lows. Unabated, we push to a new high. We get above, the QQQ gets above 400. Scenario 2, what we call the mildly bullish scenario, is we slow down a bit, right? We still overall are okay. We may not get much further. We certainly don't get much lower. And sort of the general ceiling I would keep an eye on is around 345. That would mean we sort of hold above the 50-day moving average, which is here in red. And, we have a pullback, right, which is, arguably very overdue, but it's not an end-of-the-world pullback. It's more of a pause, and it feels certainly like a pause within an uptrend, a higher low, at which point probably you can get in and buy on the dips for the next leg higher. Scenario 3 is the mildly bearish scenario. This is where we really have a meaningful drawdown along the lines of the ones we had in February, March, and in December of last year, and maybe even a little bit further. We break back below 345, and we remain below it through the end of the next 6 to 8 weeks. Scenario 4 is the super bearish scenario, and that is where we've hit the top, and the top is big. We go down in a big way. This is where the Fed hiking rates starts to get ugly. Investors start to get really anxious. Inflation data heats back up again. And not only do we break down below 345, we continue down. We get now down below the 200-day moving average, down below 300. And we're talking in 6 to 8 weeks about a retest of the 2022 low in the fall. So which of these scenarios do I see as most likely? I would vote for scenario number 3, and I'll tell you why. By any sort of measurement of the technical analysis, technical indicators here in the early July period of 2023, now that we've processed the first half of the year, by any stretch of the imagination, we are overextended. And whether I'm thinking about the S&P 500 with being overbought, whether I talk about the breadth indicators like the bullish percent index getting to extreme levels, whether we talk about bearish momentum divergences like we're starting to see on Amazon and LRCX, a semiconductor stock, others like AMD and others have had sort of that bearish divergence. We have higher highs in price and lower peaks in RSI. We're starting to see that. So that tells me that scenario 2 or 3 is the most likely scenario. And to be honest with you, as I was sketching out and planning this video, I was actively changing. I won't show you the paper, but there's a lot of scribbles. I did it in pen and I wrote a number and then sort of scribbled around and moved it around. But what's so helpful, just that process of writing the numbers down and making sure they add up to 100 and thinking about what may be more likely or not and making sure all that those relationships play out. That's the beauty of the probabilistic analysis to try to get there. So I quickly narrowed into like 2 or 3 is the most likely scenario. So that meant, what's the chance that we do some outrageous, out of the ordinary thing? So what's the likelihood of scenario number 1? I put that at about 10%. And the reason why I did that is because there is certainly a scenario, as much as it's been crazy unexpected that the uptrend has been this stable, the volatility has remained this low. I could see a scenario where that just continues, through the summer. Right? Summer is usually pretty weak. June is actually one of the weaker months for the Nasdaq. It actually wasn't at all, and the month of June was actually pretty decent. Right? I had a bit of a pullback there in the last couple weeks, but overall pretty strong, right? And so we haven't had that big pause. What if we just continue, and what if the Fed, continues to reinforce that they got it and that inflation is in check and that economic conditions can slow down? It's not the end of the world. The market keeps pricing in this recovery, and we go higher. I would argue if scenario 1 does play out, brace yourself for the fall and then 2024, because I think things could get really ugly if we just keep pushing this can down the road, as it were. So I would say scenario 1 is fairly unlikely at only 10% probability, because we would need to get to new all-time highs for that scenario, and I think that's going to be a tough hurdle to get above. Also, scenario number 4, while possible, I don't think it's incredibly likely. I assigned that probability at 5%. Seemed to me that there is always a scenario where we go really far down very, very quickly. It's rarely what actually happens. Occasionally it is, and just the exercise of thinking about what that might look like is really helpful. I mean, that disaster scenario is so unlikely, I don't want to spend any more time with it, just because given the strength of the run, there would have to be a big black swan event. This would be something we don't even know about yet, like the banks that we saw fail earlier this year, not that long ago. All of a sudden we see another wave of banks, right? Sort of bank failure 2.0 for 2023, and it turns out that was just the beginning of a bunch of failures that happened. Something like that would have to happen and get a lot worse, but I don't see that as well. It's possible. I don't see that as a likely scenario. So that left me with scenario number 2 or scenario number 3, which is the most likely. And it really honestly went back and forth between the two. I put scenario 3 at 50%. I saw a 50-50 chance that we sort of end up in this range. And the reason why I did that is because I think the pullbacks that we saw in February, March, the pullback we saw in December, I think we're very much overdue for that sort of pullback. That sort of similar pullback would be very much like the first leg down in this orange line here with the number 3 next to it. That would take us below 345. And then the question is, do we see a bunch of buyers come in? And I think scenario 3, the reason why it's most likely to me, because I think if we do get a pullback to that region, I think a lot of people will get very anxious very quickly. You might see some buying coming in, but I say overall, that would cause people to get really concerned about the Fed making additional rate hikes. I think what we're underplaying as investors is is how precarious the Fed situation is. While they keep communicating that they've got it and that they're on top of this and that they're keeping all the data dependent information in check, at the end of the day, we are one bad number away from everyone getting really concerned that the Fed does not got it. And I think that's what caused, in a lot of ways, the deterioration in 2022 is this lack of confidence in the structure of the market being able to go through this inflationary period. I think scenario 3 is where we sort of wake up a little bit, realize that this AI-driven frenzy was a little too aggressive, and we're overdue for a pullback. That's why I see 3 is most likely. That leaves scenario 2, that's 35% left, and that's where I put it scenario 2. I don't see that as an unreasonable scenario 2 as well. And I would say it depends very much on what sort of drawdown we have. I think either 2 or 3 is a safe bet, because I think we get a drawdown over the next 6 to 8 weeks. The question is how deep it gets and how much that of it turns into a feedback loop. What you have to remember is bubbles occur because the actual bubble is what causes this positive feedback loop, and the push higher creates more demand, which creates more of a push. And that's how a lot of things have gone vertical at different times over financial market history. That's arguably what we've been doing here in 2023. It started with, discussion of AI and ChatGPT, and all of a sudden anything involving anything related to AI gets bid up to aggressive levels. That's sort of what's been happening here. At some point, the music stops, we come to our senses a little bit. I think that happens here pretty soon. The question is how deep. I'm betting on more of a deeper drawdown into that scenario number 3, getting us below 345 or so. But I think scenario 2 could be a possible scenario as well. So talking through those 4 probabilities as I would assign them, how would you assign the 4 probabilities? You voted in the last video on your most likely scenario. Now take the additional step. Give me scenario 1, 2, 3, 4. Give me your 4 percentages. When you've done that, you can prove to me and everyone else that you have done a thorough probabilistic analysis. I'm Dave Keller with Market Misbehavior. Thanks for listening to the video and watching the charts. Take care, be safe, and I'll talk to you again soon.